we go. Hold on. All right. We should be live. And I do apologize for the mishap, but we had okay, I see we've got to be up and running. And if anybody sees us now, please give us a thumbs up, like and follow Dawn Block Realtor. That's my name. We had to revamp the whole setting. For some reason, there was a technical difficulty, and I do apologize for that, but we are live now. So if you are out there and if you are seeing this, please give me a thumbs up and let me know. We are going to be doing this in Q&A format. This was a webinar, but now we are live. I'm just going live. I'm not fooling around with it. We're going to talk about, this is what we're going to talk about. You know, we don't want you to be this guy. We want you to understand the process of, buying a house. And we don't want you to be this guy. So we're going to talk about the home buying process, the start of it, what you need to do to get ready. And I've got my special guest, Andre, I'm going to remove this now, which I have Andre here, Acclaim Mortgage, that will be doing that. Just to let you know, it's going to be in a Q&A format. So Andre and I will be going back and forth. If you have any questions or something comes up that you want to address, please put it in the comments. We'd love to hear from you. And then towards the end of it, what we'll do is we'll kind of go back and kind of revisit all of the questions and get your questions answered. So this is basically the beginning process, Q&A. Oh, and at the end of it, if you last the whole time, comment in the comments. If you comment, you will automatically be put in a drawing for a free appraisal. That value is about $550. And that is when you buy a home through myself, Dawn Block, and you use Andre Lenartowski for your loan. So that's a little thing that will happen at the end. And hopefully that will work, or else I'm going to blow a gasket. But we'll get it going. So, Andre, I would like you to introduce yourself, if you would. But I want to tell them a little bit about yourself and how many years have you been doing this and your contact information.
Well, my name is Andre Lenartowski, and I'm with Acclaim Mortgage Corporation. Actually, I own the company. Started the company rather in November of 2001. And I've been originating loans since 1992, and it's been great all this time.
It's a fun job.
It's a fun job.
Yes.
It's a rewarding job.
It is. And you have to admit, we meet a lot of fun, interesting people along the way. So we're happy, and we're happy to help you out. So just to kind of start out, before we jump into all of the questions that we have that we're going to be going back and forth with and show our presentation, because we do have a presentation that we put together, a slideshow that we'll be showing. So people wonder, why do you have to talk to a lender first? Well, I'm going to say that in this market that we're in right now, the climate of the market and the housing market, we know that the inventory is low. And even with the rates, creeping up a little bit, we are still seeing many buyers out there wanting to buy houses. And what's happening is that because the inventory is low, we're seeing these listings that are out there. Buyers, you're seeing more multiple offers than we've ever seen before. So when somebody's writing an offer, you need that buyer. You better have a plan in action. Especially in this fast-paced market. And being pre-approved, talking to a lender first is definitely the first thing that you want to do. Andre, what is another reason why you feel that you should definitely get your pre-approval first?
Because it's a matter of success or failure in the bidding process for a home. Mm-hmm. Pretty much nowadays, if you're not pre-approved, they're not even going to look at your offer.
So, and that's correct. Yeah.
Why even go out in the car, fall in love with a home, and not be ready? Okay, so that's your main reason, the obvious reason. Mm-hmm. And especially, like you said, in today's market, it's very aggressive, very highly competitive. So if you want to win that house that you're looking for, you have to be well prepared.
And it's basically you have to work with an agent that can strategize and put you up front and make your offer stand out among all the rest. But another reason that I feel that you need to get a pre-approval is because if you're out looking, if you're out not, you don't know even know how much you can afford, and you're out looking at houses, what first off, you're going to find something that you really love. Then you're going to decide to talk to your lender, and you might get and this is the house you fell in love with, mind you. You're going to talk to your lender, and unfortunately, what you're going to see is that your lender will work the numbers. And if he says that you can't afford that high of a house, your expectations now are going to be set at a level that is higher than possibly what you can actually afford. So why put yourself through that? Why do you want to put yourself through that distress? I mean, and then it just makes the whole buying process just so unbearable. That's another reason why you should be talking to Andre and get a pre-approval letter. But two, on the flip side of it, what if you said, okay, well, you don't know how much you can afford, but you're figuring this is you're down at you're putting yourself under the bar, when actually maybe you could actually go a little bit higher and find something that would fit your needs and expectations at a little bit higher price. So it's all about the positioning. Wouldn't you agree, Andre?
Wholeheartedly, that's the best thing to do. And pre-approval is not just a matter of just gathering some documents. There's a lot of information involved, a lot of education when I sit down with my clients or speak with my clients over the phone about all the steps. Well, the pre-approval is the first step. So I'm going to touch on other facets of the loan process as we're having that conversation. But you always need to start at that point A. And that's what we're really here to talk about today, is what is point A to be successful. So
why don't we start this now?
okay.
I'm going to shut you up, and I'm going to bring on our slideshow, because I think this is what we need to talk about.
Right.
So the first question I have here is that what is the difference between a pre-qualification and a pre-approval? So,
well, the pre-qualification is an opinion that has no facts, basically, if you want to put it that way. So as an example, let's say you come to me and you say, Andre, I want to buy a house. And I say, okay, fine. So I'm going to ask you a series of questions, and you're just going to relate that to me. Well, what are those questions? How much you make? What do you think your credit's like? And tell me what your debts are. Okay, so you've given me all that information, and then I want to give you a pre-qualification based on that information you tell me. Well, I'm going to trust you that you're not lying to me. But sometimes things get embellished, or things are forgotten.
Or sometimes we just don't even realize or know.
Right, exactly. Yeah. So that's part of the pre-approval process. It's a question and answer between me and the customer. Things like you just said, things they may not think about. Right. They may have a deduction on their pay stub for a debt that they owe, and they don't think of it because they're not writing out that check every month for it, and so forth. So that's why it's very important that we do a pre-approval, because a pre-approval, Dawn, is not only the Q&A, but it's validation of the information. So you tell me how much you make, you're going to have to prove it to me. What is W-2s, pay stubs, etc. So as you can see, the key difference is, the key difference is a pre-qualification, is my opinion. A pre-approval is actually validated information where it's been run through the system. And what I mean by that is documents provided, documents reviewed, credit requested, credit reviewed, and then we go to the next step of the underwriter or the lender liaison reviewing and acknowledging that information and agreeing or disagreeing or tweaking those numbers.
Can I ask you a question? One
Sure.
thing. What is, because I see that a lot on the pre-approval letter. What is an automated underwriting?
Automated underwriting?
Automated underwriting.
Sure. What it is, it's an expedited way to get a loan approval, okay? Or we call it an accept plus, or, it's just an automated approval. Well, there again, I can do an automated approval just by inputting some information into the computer, pulling a credit report, And based just on that information, I can have a loan approved. But again, the key is it's just what I've input. That information hasn't been validated. So that's just an important piece in the pre-approval process.
Okay.
It's required, but it's just one of the pieces in the puzzle. Okay.
Okay. So the other, did we get all through the list here?
No, we didn't. So basically, you could see the list if you've been looking at the list, the difference between pre-qual and a pre-approval. So, if you want my opinion, that's a pre-qualification. If you really want to know what you're approved for, we need a little bit more info. The number 2, I want to point out, it says, do I have to pay for an application fee? It's never maybe. The answer is no. You don't. I'm not going to charge you to apply for a mortgage with me ever. Okay, so that is no. When it comes down to being pre-approved, as you can see some of these questions, once I have all your information, I will let you know how much you qualify for, so what your housing payment's going to be, what it shouldn't exceed. I'm also going to let you know the approximate sales price of a home, and I'm going to let you know the loan amount that you're qualified for, based on estimated taxes and so forth, and association fees, if you're looking to buy a townhouse or condominium. So those should be actually answer all those questions that you have there. Lastly on this list is, can I give you an interest rate information? I can, and I can give you an interest rate based in that moment in time. Rates do change on a daily basis. A pre-approval is an estimated sales price. So I'm just going to, be able to give you what the rates are current at that time. When in fact you do buy a home, that's when you can actually lock the rate of interest.
Okay. So the next question, which we know the answer because I think we've been trying to drill it in everybody's head, is when do you need to get in touch with the mortgage person? I would say right away.
I would say before you even talk to the agent.
Right. And I think it would be best because then you're not setting any expectations. I'll give you're assuming what you're looking for. Let's say you start searching and you're looking online all the time. You're automatically setting expectations about what I like, and then before you even find out what you can afford, you're going to get a little bummed if you're not going to be able to afford that house that you really fell in love with.
Right.
So I think go ahead.
Yeah, go ahead. Being in the industry many years, there are agents that are willing to let you in their car and take you house shopping without going through these steps. That is not doing you any good. It's not setting you up for success. If you call Dawn, that's really what she's going to do. She's just going to ask some basic questions, and then she's always going to refer you to the lender. And that's the best way to do business.
It is because, I feel that your time, you as a client of mine, your time is it's valuable. We've got things we could be doing, and I don't want to waste time dragging you around if we don't know what you can afford. So I hate to be harping on it, but I feel like sometimes we need to harp on it. But if you're looking to get in the home buying process started, the first thing we're going to do is have you talk to a lender, and hopefully you'll want to talk to Andre. So I'm going to get off of it, and we're going to go on to the next slide because we could probably be on this all night long. So we're going to talk about documents. So obviously there's documentation that you're going to have to get together, right? And when do you have to get that? When do you have to get your documentation together?
Right away.
Right away. Okay.
Go ahead.
Oh, I was going to say, what documentation
what we have to do
together?
So when we do the pre-approval application, we can do that in person, or we can do it online at your convenience. You can do it anytime. And then my online application is secure, so you can upload these documents that's listed on this list into that portal where they'll be secure. And as you look at this list, that's basic information that you should have readily available either on your phone or your desktop, your laptop, and it's real easy. The more of these documents that you provide, the more successful you are going to be in the pre-approval. Because let's face it, not everybody wants to, be hassled with having to provide docs all the time and so forth. So in order to get it done the first time, the right time is give me everything that you can. Because if you don't, we're going to be asking for it and we're going to have to wait until you supply it and so forth. And I understand that you might not have something readily available, and that's fine. That's understandable. But again, with these documents on this list, really they're basic documents that we should have. We know that we have pay stubs, and we can either go to our employer's website and pull them off. If you get paid through ADP or, the smaller companies, they're giving you those stubs every week. Recent bank statements for the assets that you're going to utilize for the transaction. Again, easy. You should have them. The wage statements or the W-2s that we receive every year at the beginning of the year for the previous year income that we made. And again, we're in tax season right now, so you should at least have your 2022 W-2s readily available. So just need the last 2 years. Photo ID, you walk around, I think, with that every day.
You should.
At least if you're driving, you should. And then, there's additional documentation that's required for, different type of employment. So if you're self-employed, we got to indulge a little bit further. And that's where I'll need to get your 1040s or your tax forms and your business tax forms if you're an S Corp or so forth. And then the last two are not that, we don't see that frequently, but if you've had a bankruptcy, as an example, in the last 2 years, we'll need to see the discharge. And then if you're divorced, that rarely comes up. But the only reason why I would ask you for a divorce decree is if you give me a pay stub and I see a deduction that relates to that divorce on that pay stub, then the lender will require to see the terms of that deduction. And that's pretty much it. Simple docs. It's not rocket science. But, again, as Dawn well knows, sometimes we run into clients that don't set themselves up for success. And, we may get one or two, and it's a struggle.
It is. And this is why we're doing this again. We want to set you up for success. We want this process not to be something where you're going to be pulling out your hair. You're going to get frustrated, because it shouldn't be that way. We want to. So this is our reasoning for doing it. And I'm hoping, I know we've got more questions. I'm hoping that we can answer all of your questions. So our next question is, okay, so how can I find out the credit score, your credit score, and your interest rate?
Well, you'll find out what the credit score is as soon as we start the pre-approval online, because what I'm going to do in order to get you approved is pull your credit. Now, what we'll do when it comes to the credit is we have something, it's called a soft pull credit. What that does is it just gives us the score. That's all. It really doesn't hit your score at all. And even if it did, it would be very minute. But that's, again, what I'm told. So, but that's what I'm going to see. I'm going to be able to see your exact data. I'm going to be able to see your scores and so forth. And by rule of law, you have to be given your credit score disclosure. I will provide that to you via email, or some of my vendors I use email those or mail those out directly immediately right away. So you'll get to know that. Obviously, I'm going to tell you what it is, but you'll have backup documentation to it.
Okay. So I'm going to bring this back in. So what kind of score do I need when buying a home? So basically, so why do credit scores matter?
Okay.
And I'm going to pop over here. So here we go. And it sounds like they do matter, because you got a lot of credit scores there.
Right. Credit scores do matter, and everybody knows this already. And everybody knows the logic that, if the better the score, the better the terms I'm going to receive. Or if I don't have a good score, I won't get any terms at all. And that's when you fall into as you can see in the slide here, a 433 score or 545 score. With today's lending, you cannot get a mortgage with those scores. You typically want to see scores of 580 and above. Different types of programs require different baselines of credit scores. But if you're talking the standard, for example, FHA, VA loan, typically the baseline is 580. And then when you're looking at a conventional loan, typically minimum score is anywhere from 600 to 620. Now, that being said, you could have a conventional loan that has a 600 score, and then the same type of loan that has a 740 score, and you could see a rate difference of about 1% between those. And 1% is a lot of money per month, depending on what you purchase. Okay, so the goal is to have good scores. I don't know if we're on this one. Dawn, did you?
Not yet. So it says it says, you mentioned that. How can I improve my scores to make it says, how can I improve my credit score and how long does it take?
Right. Okay. Improving credit scores. The best way to improve your credit score is the obvious. Do not pay anything late. That's, again, logical. And when I talk about late, I'm talking about 30 days or more late. So we want to try to avoid that. But if we're in a situation, you have late payments already and they've happened a couple months ago, there's really nothing you can do about that. Most impact on the credit scores typically are the most recent 12 to 24 months. Okay. Now, as an example, there are other ways that your score is being lowered, even with credit that you're paying on time. Okay. So how can we increase? And what do I mean by that? Well, as an example, they look at the credit limits. You have installment loans, you're paying those on time and you're paying them down and your scores are gradually getting better. But mostly on revolving credit, you may have an example of a $1,000 limit. And what the key is to keep those credit scores in good standing or higher credit scores is to keep the balance at about 45% of the limit or less. So you would want to keep a continual balance of $450 or less. Whereas you might have an $800-900 credit score, balance, and you could be paying that on time religiously for the last 2-3 years, and actually that's a negative. So we want to have that balance down. So if we have lower scores now that are being impacted by those situations, what we can do is we can analyze the lowest amount of debt that we would need to pay down on those cards to increase that score. Okay.
So there's things that you can do.
You can do that, right? So if you could, have extra money where you can pay that down, your score will go up. Now, how much it will go up, that really depends. I have tools where I can utilize and I can estimate what our credit score increase will be just by playing with balances and so forth. So that's a tool that I have. And that's a conversation I'll have with you, and we can go over item by item on those particular cards or installment loans.
I do have a question here. I'm going to pop it up here. It says, if I pay late, how bad does the credit score drop? Since we're talking about credit scores.
Well, again, it depends on when that late payment was. Did it just happen in January of this year as an example? Well, it's going to drop, and it could, and there's no rhyme or reason to it, but it could be very hefty. You could see a drop 20-30 points for being on a credit card late within the last couple months on a credit card or an installment loan. So that's where I said earlier, your most impact is the previous 12 to 24 months. So it can be considerable. I've had clients lose 100 points because they made a couple late payments in the last couple months.
Okay.
Yeah.
I have another question. Maybe this, I don't know, are interest rates going up this year? Is it a good time to buy now?
Wow.
Uh-huh.
Well, the outlook is the Federal Reserve is going to raise rates again, and
But
they're
but
raising
when
rates.
you look at the rate, how high do you think we'll be looking at?
If I knew that kind of stuff, I think I'd be working somewhere else. But
You play
by
the
the
lotto,
trend,
right?
right? By the trend, we don't really know, but we know that the Federal Reserve is going to raise rates again because they need to tame inflation. Well, really, how long do we know that they're going to continue to do that? It all depends on, how the inflation numbers go up and so
My
forth, and
guess.
that's how
I'm
they'll
doing this
that's how
webinar.
they'll react. So, they're talking about rates. We're already heading a little bit over 7% right now. And rates are anticipated to come down at the end of the year. So that's all estimates. So is it a good time to buy now? Well, if you need to buy a house and move out of your parents' basement or something, the answer is yes.
But you can always I mean, I guess when you look at when I bought my first house, my interest rate was much higher than what they are now.
Right. And I tell that to my clients as well.
Right.
They're
I mean, they don't
freaking out.
understand that, but
Right.
it's like when you look at it, I mean, I think we were 9-10%.
Well, my first rate was 9.5. I had a 9.5 FHA 30 fixed rate. And matter of fact, I was happy to get it because rates were actually above that.
Okay.
And so it was, I was glad when it obviously started coming down. But, and that's what rates do. And you can get this information anywhere. You'll see them historically high and low and so forth, hills and valleys. But the basic consensus is that we should start to see them come down at the end of the year.
And then you can refinance.
You can refinance, yes.
Right. So I hope that answered your question. I want to go to the next question here, and actually, I'm going to bring up the presentation. I don't want to remove it. I want to. Where is it? Not remove. I want to add. Okay, here we go. All right. So we've talked about interest rates, down payments. Oh, and you know what? Something that we haven't mentioned is that, and I don't think people understand or know, we don't want, when you're getting your mortgage and you're purchasing a home and you're starting the mortgage process, I think something that we need to stress is that do not go out and buy anything.
Oh.
No big purchases. Would that be correct?
That is correct.
Yes.
And here's another one.
What?
Don't quit your job. I've had people do that.
Yeah.
And you know what? They're not in the business. They don't apply for a mortgage loan every day. Regardless, even though they're saying, as an example, moving from one company to another, same field, that's fine.
Uh-huh.
But sorry.
You gotta love life.
But that happens. Just you need to let me know first. But best thing to do is try to postpone that.
All right. So would you say don't buy no big purchases? Don't go buy a car. Don't go out and buy furniture for the house. Don't put anything on your credit cards. Do not quit your job. And I think, would you be okay then?
Yeah.
All right. All right. Well, that's good. So now we're going to ask another question because there are different types of loan products out there. But what is the difference? I mean, some people, FHA, conventional loans, if you could kind of explain that.
Sure.
All right.
FHA loans, they're both good loans. They serve their purpose. FHA allows a little bit of lesser score than a conventional. Down payment requirements as a minimum are pretty close to the same, 3.5%. You can even do 3% down on a conventional. And then we'll talk about long-term goals in a second. But FHA is just a government-insured loan where conventional is not. Mm-hmm. It's basically self-insured because you're paying PMI mortgage if you're putting less than 20% down on a conventional, and then you're paying MIP, which is the same thing as the private mortgage insurance with an FHA loan. Other differences is that FHA is more lenient on credit issues as well as qualifying amount, or DTI is what we call debt to income ratio, so forth. So they're a little bit more expanded than what you can do with conventionally, which tends to be more conservative. Rate wise, that's based on the score. They could be close to the same. FHA could be less, which I see more than, most of the time I'll see that. You could be less by 0.25% and so forth. So both of those programs serve a purpose. Okay. One other major issue with FHA and conventional is the PMI. So with FHA, when you pay down your loan to 20%, the FHA monthly mortgage insurance never goes away. You'll have to refinance to get out of it. If you put minimum down. If you put 10% or more down on an FHA, then you get rid of it at 11 years. Whereas conventional, as soon as you pay down that principal balance to 20%, whether it's 3, 4, 5 years, your mortgage insurance will go away. Okay.
Also, I was going to say, so when you do an FHA versus a conventional, does an FHA have a little bit more paperwork possibly, or like with the appraisal, is it a little bit more detailed of an appraisal?
No, they're pretty much the same.
Okay.
FHA is more in tune to safety and health issues
Okay.
when it comes to the appraisal. I can give you a couple examples. Lead-based paint warning. When you do an FHA contract opposed to conventional, you have a lead-based paint warning on the FHA, but you don't on a conventional, right?
Mm-hmm.
Right? Okay.
Yeah.
So that's any properties built before 78 have that potential. So what that means is that when an FHA appraiser goes out to the property, and if the property is built before 1978 and the appraiser observes chipping, peeling paint around the windows or the doors, that's a health issue. They're going to make you scrape and paint, the seller, if they agree, to scrape and paint that before you're allowed to close on the property. And again, with other health and safety issues, if they see on the property, like as an example,
I was going to say, what are the top ones that you would see? Like
the
rip
ones-
screens?
Yeah, top ones I see is a chipping, peeling paint, handrails going
Okay.
downstairs, which you would think that they would be there, but sometimes they're not. It's a safety issue. Okay. That's really the top
one.
two.
Well, I had one at I had a client go FHA. Actually, it was my seller, and the buyer went FHA, and it was actually outside by the shed. There were the brick pavers that were laid out. Well, they were a little bit uneven, so they wanted this my seller to even out the pavers, because that was a trip hazard.
Correct.
So, I mean, and two, which I thought was interesting because it was the shed, they saw peeling paint on the shed, not the house, but the shed. And they did make them, they did ask for them to scrape and paint.
Right, exactly. And even if you have a detached garage, you'll do the same thing because it's part of the value of the property. There was a time in the past where we could have the appraiser not give any value to that separate piece of property, and the underwriter would be okay with it. So we didn't have to deal with that, but they no longer do that.
Okay.
So, yeah, so those are your issues between the two. A conventional appraiser is not really going to mention those items because they don't need to. You may see them in the photos of the property, but then again, always you got to remember that the underwriter of the loan has the last say. Okay. So even though it may not be required by conventional, it may be required by the lender because they could see that risk. It's rare that they even call that, but I just wanted to mention that fact.
Okay. Well, that's all good information. And so I think was there anything else that you wanted to say about FHA or conventional?
No,
or is that
I think that's pretty much it.
Okay. All right. So with that being said, we've pretty much gone over all the questions that we are going to be going back and forth. And I think all of it was great information. I'm hoping that this information helped whoever is out there listening to us now. I see a couple of likes here, so I'm happy about that. So does anybody, I mean, if you're still listening, does anybody have any questions? I don't see anything in the comments right now, except for the couple of questions that we did go over earlier. So, and I don't see anything pop up, but if something does pop up, I'm sure that we can, after this webinar has ended, we can definitely reach out to you and get you your answers. So with that being said, I just also wanted to say that I'm hoping that you found this helpful. This is just the first step. So how I generally would like you, I always say you've got to meet with your lender, and I would love for you to meet with Andre as my preferred lender. He's very well versed at what he does. He has, he explains things very well so that you can understand them, and that too helps bring down any apprehensions of moving forward with things. So I want to thank you for being that way. Thank you so much.
You're welcome.
Yes, and also, keep an eye out. I mean, I'm going to be we're going to be wrapping up here. We're going to see what happens. Like with anything, like what happened in the beginning, my Facebook didn't work, so I've got to find out why that didn't happen. But I'm going to we said we were going to be doing a drawing. We're going to see what happens with that.
Yeah, why
See
not?
if that works. We're going to give it a
Yeah.
whirl. And again, the prize is, so if there's anybody that wants in, all you need to do is comment. And I might give you a couple minutes more if you'd like in on this drawing to get an appraisal of a $550 value, free appraisal if you purchase a home through Andre and myself. So that is a nice savings. If you'd like to get in on that, if you could comment, we can get you. You'll automatically put in the drawing. So I'll give you a couple of minutes to do that.
Mm-hmm.
And then two, just keep in mind that I do a live stream. I try to do it twice a month. I try to support our local businesses in the area. I have a couple coming up. It's called Meet the Expert on the Block. So I just want you to be aware of that. It comes out, we're going to be doing our next one, I think, at the end of the month. I'm working on getting an appliance repair gentleman, new business in the area. Love to introduce him, get him out to you. So that's in the play. And we have some already set up for April, and I have one set up for May. So be on the lookout for that. Hopefully my live stream will work and we won't have any technical difficulties. But I want to thank everybody that joined us. And what I'm going to do is I am going to bring up here, add to the stream. So this is the drawing, and I'm hoping that it works. Actually, do you see it there? Do you see there? Do you see it on the screen?
Yeah, I don't see the wheel as of yet.
You don't see the wheel as of yet. So hopefully we've got two. We're going to see who wins.
Right. There
All right.
Look at that. That's
Can
cool.
you see it? Yes.
Who is it going to be?
Who's it going to be?
It's
Brianne.
Brianne.
You are the winner.
Congratulations.
So how cool is that? Congratulations. You have a free appraisal coming to you when you use me and Andre for the purchase of your home.
Yes, Bria. So, now you have to go out with the realtor and buy a home immediately.
Yes, you do. So we'll keep our fingers crossed for that.
Right, exactly.
So
no more living in your mom's basement.
So I want to congratulate Brianne on that. Janice Zajac, you should have jumped in sooner. You would have been on. But that's okay. That's okay. So everybody, we're gonna end our webinar. I want to thank everybody that joined us. It will be on replay. So if you didn't get to listen to the whole webinar, you can definitely come back to Dawn Black Realtor, and I'm actually gonna put that up here again. Dawn Block Realtor. That is, I would love if you went to Facebook, search Dawn Block Realtor, like and follow the page. I love all the hearts and all the likes. So, and that way you'll be able to see every one of my live streams that come up. Did you want to say something, Andre?
I do. I want to say thank you for inviting me. I appreciate it. And I'm not, no lie, Dawn is a great, great realtor. You'll enjoy your time with her. She's very knowledgeable at what she does. She really, really is. And she does care about her clients. So really, really reach out to her. You will not be disappointed.
Well, thank you for that. That was very nice of you to say, and I do
Absolutely.
appreciate that.
Yes.
Andre, we're going to wrap it up, but I want everybody to know how they can, your name, your company, and how can people get a hold of you?
Sure. As you can see scrolling on the bottom, you can always reach me at area code 630-400-3413. That is my cell. You can call. If I don't answer, please leave a message. I'll call you back as soon as possible. You can text. That's fine. Or you can email me at Andre, that's ANDRE, at Acclaim, ACCLAIM.loans.
You had to think about that, huh?
Right.
And you can get a hold of me, call me or text me at 847-630-2121. I'm available for you. Or you can email me, Homes by Block, that's HOMESBYBLOCK @gmail.com. I want to thank everybody for joining you. Make it a great evening and be on the lookout for me on the next live stream.
See you later. Take care.
Bye.
Bye-bye.